Hello, today is May 19, 2023. It's going to be the OPEX expiry, and a lot of people are actually wondering whether 4.2 is going to break out for SPY or 4.3. Are we going to go headed higher or are we going to crash? That seems to be a very good question to answer, but I think that for today, it's better to take into perspective and evaluate actually what's happening towards mega trends for those people who are not really interested in what happens on a day-to-day basis, but what's actually going to happen if I'm with a longer term time frame. So let's take a look today. Actually, let's evaluate a few trends, just a few charts. Well, not really few, but a lot of charts. It's going to be a lot of charts today, and let's just take a look on what the markets are saying to us. All right, let's take a look at that. I will be sharing a lot of slides today. All right, so category today is long-term charts, secular trends, foundational classes. It's May 19, 2023, and we're going to evaluate Awesome10X trends in a decade. So again, we would emphasize that for long-term trends, it's usually being used by investors, although traders can obviously use it to their liking. Long-term investing does not mean keeping eyes closed. It's actively tracking while passively holding. If the buy decisions are correct, selling should become infrequent. Frequent selling is a reflection of poor buy decisions. And then usually investors are recommended to invest only 4 times in a year, quarterly, usually after earnings or before earnings, with a business focus for at least 12 quarters or at least 3 years in at least 20 high quality companies that one chooses in a secular, unstoppable trend. Add only on winners, never on losers. So a system could be you have 3% of your portfolio, each of the 20, not deployed immediately. So example, if it's a $20,000 portfolio, 3% of a 20,000 portfolio is about $600, and you're assuming that you will be deploying a maximum weight of 5% with a scale out option of 6% above, meaning you will be deploying $600 to $1,000 with a maximum weight of $1,000, such that if your $1,000 suddenly went 1,200 or even higher, you can actually scale out some of those gains and actually use it to either buy more shares when it falls, or you just keep the rest until you find another company. So one of the secular trends that is unstoppable even for the next 10 years is e-commerce. And in e-commerce, we have highlighted Shopify. So for those who aren't aware of Shopify, I guess that you would have to learn that it is still one of the biggest companies that handles cloud-based commerce platforms for small and medium-sized businesses. Now, we're going to actually be focusing more on the charts here, so please don't actually ask me a lot of the fundamental guidelines. But Shopify is obviously one of the leaders, aside from, of course, Amazon, when it comes to e-commerce segment in the US and also in other countries. So what we can see here is a very, very clear $1.85 that hit 177. That means that your $185 was $17,700 in about 6 years, making Shopify a bona fide mega leader. Now we saw that actually Shopify fell from 177 all the way towards $20 here, and recently has been rallying towards $60. Let's take a look here on a more granular level. You can see that Shopify actually bottomed out last May 2022 here, and about consolidated again and made another bottom here at about October, November. Had a nice breakout here at $40, and it actually has seen a nice breakout with a very, very strong volume here at about $50+ to about $60. This consolidation is very, very powerful in our view. And although we don't know if it's going to lead higher, we do see that this is a consolidation that is already in the making for a long-term reversal trend. So we want to actually check out Shopify over the next few quarters on whether 40 is the new bottom, 40 is the new 20, and are we going to break higher over 70, or are we going to go straight towards 90, or is it just going to trend from about 40 to 70 again for the next couple of years? This happened within a year, and this could happen also within a year. So we will actually check this out. Again, this should be evaluated quarter by quarter, but this quarter has definitely been positive for Shopify. Another e-commerce company to actually check out for is Mercado Libre. Mercado Libre, of course, is known as the Latin American e-commerce with payment solutions like Mercado Pago, their shipping platform as well. So we'll just focus on only, as I said, we'll focus mostly on the chart. Mercado Libre actually existed for about 15 years already. So about you would have been able to buy the company at $8, and at its peak, it went as high as $2,000. That means that if you had $800 invested at the lows of Mercado Libre, technically speaking, you would have seen a $20,000 move on your $800, which obviously makes Mercado Libre, sorry, 8 to 2,000 is almost a three. That's a 250x. So your $1,000 is $250,000. Your $800 would have been $200,000, and that is really a life-changing company. So you can see that a lot of people are, of course, interested in Mercado Libre on any drops. It had made a drop from about $2,000 to about $800, and even collapsed towards $600 at the lows. It's currently trading at about $1,300. It could consolidate over the next couple of quarters. Watch out for what's happening here. But so far, we're seeing actually that this company is slowly but surely actually trying to recover. So Mercado Libre should be on the watch list of all of the people who are interested for an e-commerce play and not necessarily interested in the short term because 1413 could be topish now. It could actually collect further around $1,000 or $900 or even below $900. But this is something to watch out for on your shopping list. Maybe on the next quarter or the next 3 quarters, you may be able to get it, just like here when it was just consolidating around July 2022 until about December 2023. Now, Chinese e-commerce platform Pinduoduo has been in a boisterous and cyclical path from about $16.50 to as high as $215 in 6 years, only to fall back towards $20, rallying back to $100, and currently actually trades at about $60. So Pinduoduo is actually a very highly volatile name. You can see that assuming that the current peak so far is about $100, let's see whether Pinduoduo goes down towards $50 or will it actually get supported at 60. But there seems to be quite a lot of buyers at 20, at 30s, 40s, and 50s. So let's watch out for Pinduoduo as one of the largest e-commerce platforms is also conquering US today with their brand Temu. JD, which is a very, very well-known company in China, Jingtong is actually a company that has been in existence in the markets for about 9 years now. JD has gone from $20 to as high as $110. And we actually find it quite interestingly from a chart basis that it's actually trading at about multi-year supports here at about $35. So for those who actually want to investigate more about the fundamentals of JD, perhaps you want to watch in the restructures, you want to look at the quarters of JD, and there's actually quite some interesting CEO changes for JD. And it looks like at these levels of 35, there seems to be quite a valuation gap with the revenues and the earnings. So something to watch out for. Place on the watch list for those who are interested with an e-commerce bet that's actually trading at multi-year support. JD.com, again, from a longer term perspective, you're seeing actually some double bottoms in place here at about $35. Sure, it can probably go to 34, 33 on any sell off, but we might see actually a bottoming out phase here for JD.com. Now, Target actually is a company that's been in existence in US since 1967. So there's actually a lot of stock splits, and this is a company that if you had bought since IPO, would have been a $34 investment would have been $15,000 or a 500x return, of course, compounded since 1967. So Target is actually currently dropping. You can see that it's now trading at 154 from a peak of 260. Maybe it can still crash here towards 120 or $100, but this is something for us to watch out for, given that Target Corporation is, of course, one of the best or one of the largest retailers still in the US. So something to watch out for those who are looking at some retail companies in the US. Take note though that you might be interested to read up on the income reports, as recently there's quite a lot of negative headwinds for the American consumers. So that's the reason why there's quite a significant drop from about 270 to 150. Sure, it may actually drop towards 120 even. So let's just watch out for these companies in case they drop further. Now, Walmart is a company that goes from 5,000 to making you a bona fide $100 million in 55 years at the current price of 154. So Walmart actually IPO'd in 1970, had multiple stock splits, making you this company has done multiple stock splits 11 times. Each split was worth 2 for 1. And actually, if you check out, so Walmart is actually trading at all-time highs in this year, 2023, still trading at about $150. So you can see that it has been languishing from 150 to about 120, very tight range. But you can see that Walmart has never had really a significant pullback, and has been actually just a steady company that has paid dividends for its longer term investors since 1960s. So amazing name to actually just illustrate the power of people who know how to compound their wealth and basically never sell a company such as Walmart. So Walmart here you can see has actually had a big drop here from about 160 towards about 118 here, but actually was able to manage to hit back towards the V-shaped recovery again towards 150s. So we'll see whether this 150 is going to be range bound. Will it actually trade between 150 and 120? Or which actually used to happen here, if you'll notice here, around 1999 till about 2003, it was actually range bound from about 60s to about 50s. So it's highly possible that Walmart is also going to be trading around 150s to 120s. So if you do want to actually enter some Walmart, you may want to actually wait it out in case it actually does something similar to these levels of about 1999 towards about 2007. So Alibaba is a company that got listed in US since about 2014, $58 to about $320, and it's currently actually trading at quite an attractive level, about 84. So Alibaba wants to unlock its value with a lot of restructuring spin-offs towards the next year, or maybe at the end of this year, listing perhaps their cloud units. They want to break up the business into six. So the cloud, their logistics, their e-commerce, just to name a few, and then of course maybe their financial arm, which is the Ant Financial. So we see actually some quite good developments on those restructuring, and you may actually be interested given that Alibaba at about $80 could even go towards 58 again, but actually that might be quite an interesting proposition to just cost average and add more. So actually Alibaba is actually in my list of shopping lists for a really mega trend outlook, not like thinking about the next few weeks or the next few quarters, because obviously these things will take time to restructure. Now, as I said, Alibaba is trading at the low end of its multiple years. So in case you're wondering, is today a great time to enter? Looks like it merits quite a lot of investigation on your part. But in my view, I think that about 80 towards 60 is quite a limited downside, although your upside may take quite a while. But definitely it's worth for those who have a longer term time frame. Now, Amazon is a company that has gone from $1.50 to $3,750 in 28 years. You can see that your $150 is basically $375,000. That's amazing, of course, for Amazon, and continues to be that strong. So Amazon actually, as high as 3,750, has fallen down about 50%. You saw that from its peak of about 190 here, it has gone down towards 80 and has since shot back towards 120. So it has been rallying off its lows. We don't know if it will continue all the way towards 180, but it looks like the infatuation of the market towards companies like Amazon's AWS and their AI stack is making the people actually appreciate and buy that 50% drop. So for those who are interested to look at Amazon, you may actually want to watch this arena, because there is some buying flow that you can see breaking above $113 here. And although there's some resistances as well here at 140, you do have some big ranges happening today on Amazon. Okay, so the 80 areas and the 90 and the 100 areas have been the same supports also in the 2018 to 2020 ranges for Amazon. So this is just the daily chart for Amazon for those who are looking. So there has been quite a sharp breakout here at 113, and that seems to be the first support for Amazon buyers who are interested. And then you can see that it could consolidate for quite a while. Maybe you can still be able to get at about 110 if you're interested, 105. So just watch out. But the longer term trends on Amazon is definitely, of course, still trading for the bulls with a lot of supports at about 100, 90, and 80 in the same, just in case that it does fall. Now, Etsy, an e-commerce place, 7 to 308 years. Okay, it's a lot of handicraft, so it has gone down sharply. So from a $7 name to about $300, it has fallen down south towards about 70s, rallying towards back towards 150s, and then gets faded away towards 92. So a sharper pullback, as you can see for Etsy, and it might actually trade within a range as it tries to recover its business. So from about 68 to about 100, there seems to be still people looking at where they will pick up Etsy. This one might actually need a lot of time to check out with a lot of earnings and quarters to be monitoring for Etsy. But you can see that there's some signs of consolidation happening here. Not as easily deciphered, unlike Shopify, for instance, or Amazon. But this one, we watch out for what's going to happen towards these areas of at 80s for Etsy. Sea Limited is a name in Southeast Asia, went from $10 to as high as $370 at its peak over 6 years' time, has fallen straight towards $40 and then has rallied towards 90s and is now currently back towards 70. So we're seeing Sea Limited still finding its grasp. There might be some buyers at 60. There might be buyers further at 50, but we're seeing actually a lot of selling pressure still below 100. So it's still range bound for Sea Limited. Kind of similar when Shopify was trading at about $20 to $40, still finding its groove. So Sea Limited might actually still take a while, but you can see that some buyers of Shopify and Sea Limited would probably be accumulating more on the low end side here at about 60 or below 50s. So just watch out for those people who are interested for Southeast Asia's Shopee, just an e-commerce play for Southeast Asia. Now, this is quite an interesting pick, Farfetch. Farfetch is a luxury retailer. It went from about $6 to $72 at its peak and is back actually towards about $4 and is currently actually just finished on their earnings report and is returning to some growth. So it's now trading at $5. Those who are interested for a luxury online play, so this one, Farfetch might be something that you want to look at your watch list. Just take a look. This might be interesting after a nasty drop of 95%. Can it rally back towards 10 or 12? You might actually get some bargain hunters entering on Farfetch below 5. Pinterest, this is quite an interesting company. Went from $10 to $92, dropped back towards $20, and is now currently there at about 20s. So we don't know if Pinterest is going to get its groove back, or is it really going to just shut down as a company? Will it actually get e-commerce in their company? They want to actually enter e-commerce and not just rely on digital advertising. We'll see whether Pinterest can do that. There's quite a lot of activist investors as well. But when you study Pinterest, there's also a lot of product managers that are leaving the company. So we'll see what's going to happen here, but still actually questionable on what would happen on Pinterest over the next couple of quarters. Those who are interested in Pinterest have to watch the earnings quarters for every 3 months. Ocado has gone from 50. So this is a London e-commerce play. It's gone from 50 to 28 and has gone down towards 390s today, of around less than 400 in about 12 years. So we don't know if this will go further towards 300, but there seems to be quite some attention to see, given that about 200 to 400 is quite an arena of support since 2014. So might have to watch on Ocado here, a European e-commerce player. So some SaaS names to watch out, like Team, Atlassian. Atlassian has gone from 20 to 475, nearing 500 in 7 years. Has seen quite a sharp drop towards $80. This is an Australian Microsoft for those who are more geared towards the enterprise softwares. You can see that there has been some sharp sell-offs at 300 and 150. We still haven't seen a really, really strong support on Team. It could fall further to 100, but something to watch out for those who are looking for some enterprise platforms that are trading in the market. Datadog has gone from $28 to $210 here, shot down straight towards 60, but since the recent earnings has quickly returned towards more than 50% in just a couple of days, from 60 to 95. I guess that is an impetus to watch and read further for Datadog, given that there seems to be quite a lot of buyers here at $60 area, and any dips on Datadog is worth a watch, so worth reading these types of companies. In the healthcare sciences, you've got Exact Sciences, who is actually pursuing early detection of cancer. And they have those Cologuard, and they've actually done well such that it managed to actually break above the $70 easily on the earnings and went as high as 80. So this company actually has gone from $5, sorry, not 2 years. That's 20 years. I'm sorry, I should type this correctly. 20 years. Again, okay, so Exact Sciences from $5 to $155 in 20 years has since fallen down back towards 35 and has recently rallied straight towards 80 bucks. So I think that it's very clear that Exact Sciences has sharply rebounded. There are buyers, and we don't know lang how high it can still further grow. But so far, there's quite a lot of buying pressure here at 60 areas. So watch out for that. Now, genetic editing is gene editing is a new science field, new field in addressing cancer. So CRISPR, we saw this get listed in 2017's around $12.50s with a high of 220. It has since shot down towards $40 and has since been rallying 40 to 90, 40 to currently 60. Do we think that CRISPR can hit 90? It sure looks like there's some range-bound action for CRISPR. Take note that CRISPR has phase 3 trials for their blood thalassemia, for sickle cell diseases. And they're working with Vertex Therapeutics just in case it becomes commercialized. So it seems like there's quite a lot of bulls, as you can obviously see here, from about $40. So probably watch out for those who are looking for some ideas, not necessarily for the next 6 months, but really for those who are interested to study gene editing. I would suggest that you really put CRISPR on your watch list for those who are interested with CRISPR-Cas9 technologies, so genetic-based medicines. Now, payments is a very huge secular trend. We are, of course, headed towards a cashless society. And so there are several roles that you can actually check out, which are also interesting at current levels. Square actually went from $10 to $280. Of course, there has been a sharp drop recently of 80%, that you can actually acquire the company near 59, almost near that 2018 to 2019 areas. So I've been actually accumulating some Square at about 59, 58, 57 areas. Sure, it can probably go 50s. But I think that these drops are actually opportunities for those with a longer term time frame. Of course, there could be some selling pressure as well at 90. Seems to be that it's range bound, similar to those doggone years here at 2018 to 2020 before sharply moving up. So Square, for those who are aware, is also known as Block. So also the leader in Cash App, has been introducing not just helpful payments for merchants, but introducing high yield savings and a lot of like stock market trading or even crypto trading for their customers. So not bad for Square, something that you might be interested to put in your quarterly watch lists when you're actually looking for earnings players. Now, PayPal is also an interesting company in my view, given the sharp drop. So PayPal actually went from 30 to 300 over a course of about decades already. So PayPal was actually reintroduced in the market again in about 2015, although this was a company since 2001, which was acquired by eBay. This was prior to eBay's acquisition. PayPal, of course, was founded by Elon Musk himself, as with a lot of um, very highly skilled PayPal mafia, which is now known, like the likes of Peter Thiel, Reid Hoffman, Max Levkin, etc. So PayPal actually went from 310 recently to as low as $60 and has been still finding a support. So it could go 50s but I do think that there's still a lot of valuable customers that are still availing PayPal. So I think that at these levels of 80 bucks, sorry, it's not even 80 bucks, it's at the level of 60 bucks, it might be quite an interesting proposition for those who want to watch this for your buy list on a longer term time frame. So PayPal here, I think, is quite interesting, even from just a chart perspective. But again, I think for those who aren't aware, they do make $1 billion of cash flow. Sorry, $1 billion of cash flow, I believe, every quarter. So that's about $4 billion every year. I think it's a cash machine. I think some people were a little bit disappointed about their quarterly margins potentially going down because Braintree, which is their subsidiary, has lower margin. It's more like a third party. They help a lot of companies such as Airbnb, for instance, for their payments, for their websites, etc. So anyway, something for people to watch. PayPal. Stone Co. Is a company that is from Brazil. They are an electronic payment processor similar to Square, and it is actually just reported quite good numbers. If you want to check their recent quarters, and the nice thing about StoneCo is actually it's listed below IPO. So the IPO price was 24. It reached as high as 96. It went as low as $8 and is currently at about 12 to 13. So you might actually want to put on your watch list or buy list StoneCo. Tencent is also an interesting company, $1 to $720. Of course, Tencent is in the field of payments, video games, cloud, and so many venture capital that they had to even give dividends for it because Tencent has invested in the likes of Pinduoduo, JD, Meituan, and the likes. So Tencent is a company that has gone from $1 to 720 Hong Kong. This is listed in Hong Kong HK. That's 700 HK 700. So far, it's actually dropped to as low as 200 bucks and has since rallied towards 400 and is currently trading at the middle part of about 330. It may actually still continue to fall near that 278 or 290s or 300, but we look to see that there might be a lot of bargain hunting for Tencent within these areas near 300. So something to watch out for those who are still interested in Chinese name WeChat player, Tencent. So many programs, integrated payments, enterprise. So very, very strong in China. Visa, of course, Visa is a name that everybody trusts in terms of credit card processing. So this company went from $10 to as high as $250. Very, very low volatility. The lowest it's gone down was 180 and has since rallied back towards 230s. There might be some selling pressure at about 250, but it looks like just consolidating, almost similar to Walmart. MasterCard has gone 100 times since IPO 17 years ago, $4 to almost $400. So yeah, this was and MasterCard was listed at about 2006. So in about 16, 17 years, 100 times your money. Recently, though, over the last 5 years, MasterCard has been just in a range bound from about 280 to about 400. So it seems to be just trading within that area of about 30% range. So that's probably how the stock would trade within the next couple of years as well for MasterCard. Smartphone, of course, Apple, another multi-million player, 700, the largest, of course, the biggest influence in the entire U.S. indices. Apple has basically gone from $700 to $1.8 million in 42 years. I adjusted through the splits, through all those since their IPO. So yeah, it's of course one of the reason why people basically don't like to trade their apples They basically, especially if they bought in very early on. So in any case, Apple is currently trading near its peak at about $180. It has gone down as low as 120, so it may actually trade range bound from about 180 to 120. We'll see how things go. Taiwan Semiconductor, which is of course the one producing almost all those semiconductor chips for Apple iPhones, you can see that this has gone from $3.50 to $150, making it one of the most important companies in Taiwan. So Taiwan Semiconductor is actually now trading as $90, $92. It is also the one producing a lot of NVIDIA chips today. So $150 has gone down towards near 60 and has rallied back towards 90. We'll see how this trades, but I believe that this would trade similar to Apple and a lot of the other phones that it caters to. So TSM actually caters mostly to Apple, Samsung, and the likes. So a lot of smartphones. Streaming, digital advertising, connected TV revolution. You can see that Disney actually is also a very, very old name, but still exists, right? Since 1968, it was listed. If you adjust it came from 22 cents to as high as about $200 here. So definitely your $220 would have gone $200,000 at its peak. Currently, Walt Disney is trading at about 93, and it's trying to actually weed out a lot of their streaming related losses. So they're still doing a lot of cost rationalization spending. Of course, they're trying to figure out theme parks that are not performing to be closed down, such as the recent news was Star Wars Theme Hotel closing down because there's not much guests, because it's also too expensive to continue. So we're actually seeing Disney actually trade near also the bottom over the last 10 years. Disney at about 90 could actually trade near 80s here, but that would represent near the 2015 lows or 2013, 2014 area lows. So you might be actually watching out for Disney, and for those who are looking at some long-term ideas. I would actually look at the long-term charts first and then try to study whether Disney fits into my portfolio on the long-term basis. Take a look at Netflix. All right, Netflix went from 35 cents to as high as $700 at its peak, dropped back towards 160, and has since shot back towards 370s area over their from subscription based to ad tier based, making it a dual business model. This means that your $350 went to $700,000 for Netflix at its peak if you bought at the low and sold at the peak. Now it's trading at about 370. Sure looks like there's quite a lot of buyers who believe that Netflix ad tier program is working well, but we don't know if it's going to be shooting towards 400 or stopping first. So at the same time, we know that Netflix here at about 250s and 300s quite have a lot of buyers. So for now, it's actually looks like a range bound play. There was quite an overshoot below 250 towards 160, but has since mean reverted for Netflix. Facebook Meta also has mean reverted. This came from $20 to $400, sharply dropped towards $80, and has since shot back towards 248. So we'll see whether this can still rally towards 300 for FB, aka Meta. But that has been a very sharp rally, as you can see, for Meta. Google has gone from $25 to $150, dropped towards 85, and has since been rallying, breaking 110, and it's currently 123. We'll see whether it hits all-time highs towards their AI, generative AI Bard, Duet AI, all their competition, of course, with Microsoft. So they're fighting for dominance in the Gen AI search space. Okay, so far the market is very happy with Google and still actually on the uptrend. You can see that very clearly that the sharp drop was actually bought, and bulls actually has been continuing ever since 90, 110, and 120s here. For athleisure, Nike, let's just take a look at some important names here. Okay, Nike actually went from 10 cents to $178, sharply fell down here towards 90, and is currently trading at about 120, consolidating Nike between 100 to 120. So it looks like it's just in a consolidation phase for now. You can see that this company has been listed in the market in New York since 1981. Adidas has gone from $14 to $200, and Adidas has dropped from 200 to 50 bucks. It's now trading about 88. I think there's quite a lot of controversy today about Adidas having those Pride collection. Nonetheless, it looks like there's still a lot of buyers on Adidas here between 50s to about 70 area. So you want to actually watch out for where the bottoming pressure on Adidas is. Fast foods, McDonald's has been quite a resilient name, trading at all-time highs this year from 1960 to 2023. That makes it a 63-year-old listed company. McDonald's has gone from 15 cents to $300. That means that if you had invested $150, that means that it went to $300,000 over that span of time. So McDonald's continues to actually be traded up by the market, and you can see that very clearly that it's been just quite a sharp ruler upwards, with almost sometimes it just sleeps, but in the end, it's just been a straight shot up. Yum Brands, the owner of Pizza Hut, is also on an uptrend, and KFC. You're seeing Yum Brands go from $4 to 140 since 1998. Not as sharp as McDonald's, as this one is since 1960. This was since 1998, but still quite a sharp uptrend for Yum, with a lot of buyers every time it dips, about 20% or so. Every time it falls, there's always a buyer for Yum Brands. Shake Shack has been quite volatile. You're seeing it go from 30 to $140, drop back to 40, rallied straight towards 70. So there's been quite a lot of volatility for Shake Shack. But we're seeing that Shake Shack wants to be the next Starbucks and next McDonald's, using a lot of their capital to open their own stores, and also doing a lot of franchise licensees all around the world. So Shake Shack has also gotten some news that they have been having some activist investors like Engaged Capital entering the business with the board of directors, I think. So Shake Shack has been doing well, and they're opening additional 40 company-owned stores in US and other 40 stores around the world, some in China, some in Thailand, some in the Philippines, some in Mexico. Yeah, so quite interesting. Try to study Shake Shack for those who are interested for those burger opportunities around the world. Haidilao Hot Pot just got listed around 2019. So this is just barely new in the Hong Kong market. From about it listed at about 17, traded as high as 84, 88, dropped to as low as $10 during the COVID, and it's currently trading at about 18. So for those who are interested with Haidilao Hot Pot on whether the future is going to be bright for it, maybe at about 18 to 10, you might be looking at Haidilao. So probably something to watch out for. Domino's Pizza, of course, this is a very, very strong company in US, IPO 14, opened 11, sank to $3 initially during 08 crisis, went towards a peak of about 575, and currently, due to some difficulty in their margins, they're actually trading quite a good price here at about 300, and they may actually fall below 300, but I think this is something to watch out for in 2023. Maybe the crisis on Domino's Pizza could be an opportunity for those who are interested. So about 300 to 250, something to watch out for on Domino's Pizza. Chipotle has gone from $22 IPO, went up 44 the first day, and has since sharply gone up almost 100x after 17 years. $22 is now $2,100 currently at all-time highs. Might even trade to 2 for the next couple of days after those recent earnings quarters, showing that they are able to pass on the price increases without affecting their volume. They're also increasing their number of stores. So Chipotle Burrito has been quite a delicious treat for a lot of investors who have bought into the company, especially since listing price. So that means if you had invested $2,200, yes, you would have gone $220,000. Quite an amazing feat for Chipotle. QSR is the owner of Burger King, Tim Hortons, and the likes. So you've got a company going from $25 to $80. It has been quite volatile. You're seeing 80 go to 25s, and it's now at 873. So it's been quite in a range bound arena for QSR, unlike McDonald's, that is just basically in an uptrend. So Burger King is and Tim Hortons is still trying to and Popeyes, basically QSR owns Popeyes Kitchen, still trying to find its groove. But there's quite a lot of buying pressure here at $50 area. Starbucks, this is a company that has made millions of their customers happier, wealthier, right? So Starbucks went from 34 cents in 1992 to $120. That means that the $340 investment would have gone $120,000 for Starbucks. And it's currently trading at about 107, so it's roughly at about 20% lower from its multiple peak. Fell as low as $70 here on I think labor headwinds, labor unions, but the market actually sniffed that out enough to buy all those dips and all those problems and rallying towards 120. We don't know if it's actually going to consolidate further. Of course, there's a lot of Chinese opening for Starbucks. They've been growing around 3,000 stores in China, and I think their focus is to keep on growing and opening more Starbucks stores in China. So those who are interested in Starbucks story, you should actually watch for those earnings quarters every time. Yeah, so in terms of mega trends, obviously there's quite a lot. I didn't mention everything. We tried to tackle a few like payments, some healthcare, like considering gene editing, for instance. When you want to think about semiconductors, of course, today the hype is on AI. Then, of course, you could consider the gaming sphere, connected TV, social media. You can consider digital advertising. In the end, how do you actually manage your risk given it's very hard to know what's going to happen over the next couple of years? How to take profits and cut losses systematically. A guideline for those who have no system is number one, if you choose 20 companies, since you don't really know which of the 20 companies will eventually be the biggest winner over time, you try to position size them 3% of your portfolio, increasing weights on winners due to their earnings or news. So, for instance, just recently on our AI theme, we were buying a lot of Palantir. Some were actually ecstatic. Palantir went like 50% after the numbers came out from about 7 to 10.50. So there are times that you would probably scale out if that is already too large in your portfolio. Now, of course, there might be some times that you would also lose. So losses are also closed at 20% from entry or less. Let's say you have a gap down next quarter. Let's say there's a mistake in your assessment on a thesis. That would be something like you could do as a default setting. Allow the positions to move, but basically 20% below. Sometimes you get that nasty drops. You may actually end up having to sell at a loss and then just get back in if you believe that the market has been recovering already. So that could have happened to you on Shopify, etc. And nowadays, Shopify is actually already on the uptrend. So you might be actually interested to put Shopify in your buy list. Okay. So we will hold winners, but trim positions as they increase 10 to 20% from entry. You sell a bit, 1/3 on the 10%, leave the balance to run with a trail stop. Given the winner size can be 3% of portfolio as much as possible, you can add to your winners and maximize a move capped at 5% or 10% of your portfolio. It really depends on you. Some people actually end up having tons of positions on a concentrated name. Let's say they keep on adding and adding towards that position. Really depends. Some people cap it at 10, some people cap it at 5, some people cap it at 15 or 20. End of the day, these are just guidelines for your risk management. And if you're really, really confident not to have 20 companies, but just 3 companies or 5 companies, then that is going to be your choice. So the investment process is generally find an idea coming from a secular trend theme. Usually it has to come from a really, really strong trend that you believe is unstoppable. So for instance, for those who are buying Square or PayPal recently, or those who are buying some e-commerce names like Shopify, or you're buying names like, for instance, you're buying a secular trend theme on Google, on AI, then that's something that comes from a secular trend theme. You study the earnings, you try to study the catalyst for the years, and you get technical entry and an exit. So that's generally how the process works for long-term trends. And looking at the charts will eventually help you to decide on what companies you really want to put in your portfolio. There is a question. I'm gonna just check it out. Hello, may tutorial po kayo open account ng Trade Zero. I don't have an account with Trade Zero, so I couldn't really make a tutorial. Pardon about that question. But I do think that in general, they may have their own website tutorial. You may probably just search it online on how they allow you to buy stocks, etc. We do use interactive brokers. I think Filipinos can use interactive brokers, eToro, Webull. Those are okay. Webull is a company situated in Singapore, but they actually allow Filipinos to also trade online. So you can actually use the Singapore app in case that you're interested. Yeah. So there are a lot of let me just take note that there are a lot of companies that are secular trends. I didn't actually mention a lot of secular trends. We can focus more on solars. We can focus on oil names. We can also focus on electric vehicles. So you can see that there's quite a lot of mega trends to think about. A while ago, I just discussed a few. And I actually have more charts if you wish to uncover and check. The nice thing only to watch on the longer term charts is that you see that drops are not things to be afraid of, especially if your time frame is quite long term. And so, for instance, those who got in, obviously, those who got in on Shopify at about $20 to $40 really are making quite a good amount of money, given that Shopify is trading at $60 today. Or, for instance, those who were, buying the sharp drops on CRISPR at about 40 have been getting rewarded at the $60 today. Those who bought the likes of Google at 85 or 90, now it's trading at 120s. I'm saying, yeah, and of course, if you were buying Netflix at a 160, or if you were buying Meta at about 88s or 90s, you can see that these people were willing to dissect the long-term trends of the company and use those drops as a buying opportunity. So that has happened in the past, and there are continuing to be more bargains. We saw that StoneCo today is trading very low. Farfetch, you've got a lot of payment firms. So a lot of e-commerce and payment firms are actually very low today. So Alibaba and JD are interesting to study upon. StoneCo might be an interesting proposition to also study. Farfetch might also be interesting to study. Mm, you may be also you may also want to wait it out if you are very very interested, for instance, with McDonald's or with QSR, with Visa and MasterCard. So obviously you're trading at all-time highs like Walmart. You do know that they sometimes drop, but their drops are like 20 to 30%, not as big of a dip. Nonetheless, I think some people, of course, would like to have some McDonald's in their portfolios if they can only buy it at 30% cheaper, or they want to buy an Apple, but it's trading at 180, so they'll wait for 120s, for instance. Now, nowadays, you can see Domino's Pizza trading near half its value from about 575. It's trading about 300. Maybe Domino's even goes $250, something for us to watch and read about. So not all, of course, there are several trends to take a look at and to really, a chart doesn't just get bought just because it's down 50%. But it's interesting to put it in your watch list, obviously, especially if it's in a secular trend. And then, of course, study the names that have been sharply rebounding, not necessarily names that you are aware of. So Datadog has been creeping up from 60 plus to about 95. And then I think at the end of the day, you filter it out, and then you probably want to choose just 5 or 10 companies, not necessarily study 20. Some names would be slow, like you saw Disney is slow, but you may actually want to buy it while it's low. It's got a lot of losses still on their streaming. Yeah, so and actually don't focus on just few sectors. As I said, there's quite a lot of mega trends. A while ago, it was just an example. Those were just a few. You can actually focus on looking at a lot of electric vehicles, a lot of solars, renewable energies. We haven't even shown to you the charts on renewable energies. Some are actually trading quite at the 80% drop. So there are some interesting solar names like Sun Power and Sunrun trading today at about $10 and $15. So it's actually worth a watch list at the very least. I would say that the market, it's very hard to say what's going to happen in the short term. Do we go from 4.2 to 4.250? Do we go to 4.3? Do we go to 4,000? Do we go to 4.1? Those are very hard to decide. Some people may say, oh, it's expensive. But if you take a look further underneath the surface, there are some names that are cheap. So we think that PayPal and Square might be interesting for those who are really interested with payment plays. In fact, we were actually looking also, I forgot to even look at showed you the chart, even for the likes of Affirm and Upstart, which have also been rallying recently, given that they're far from bankruptcy levels and they have been trading already at about $10, $12, and the likes. So, which is about 90% from their peaks in the past, 2021. So I think there's quite a lot of companies that you want to be investigating upon, especially since most of these companies do pay quite a hefty amount on a longer term time frame. So yeah, something to for us to watch and learn. Of course, some people are interested to buy TSM. They saw TSM go 50s and 60s. It has since shot up towards $92, but maybe it goes back towards 60 plus. So let's watch, or even Mercado Libre if it goes below $1,000 yet again, something to study. Okay, so there's quite a lot to uncover in the markets. Of course, there's a lot of stocks. So I just suggest that that is a guideline to help you evaluate long-term charts and to just help you execute in case you get a little bit antsy. Hey, should I buy JD at 35? What if it goes 34 or 33? At least you know that, well, JD used to be trading above the hundreds. So at 35s, although that's not the cheapest price, it is at the multi-year levels of support. Or for instance, if you're buying Alibaba at 84, yeah, sure, it can go 80s, it could go 78s. But the lowest that it has ever been was $58. So I think at least you have an idea of what you're doing, and you can investigate further if that is more your cup of tea. But don't try to put all your eggs, let's say, in just Chinese stocks, because JD and Alibaba is obviously still under a lot of geopolitical risk, right? So those things might actually affect the risk temperament of your portfolio. Okay, thank you very much and see you again next week for studying the US markets. Bye bye.